Let's talk about how Silicon Valley Bank failed in a way that's easy to understand. Silicon Valley Bank was the nation's 16th largest bank, and it was the bank of choice for the nation's startup ecosystem. Now, over the past few years, these startup companies were getting crazy high valuations and getting infused with millions and sometimes billions of dollars of cash because money was cheap and interest rates were low. And these startups took this cash and deposited it at Silicon Valley Bank. And SVB, just like any other bank out there, took this money and invested it into ultra-safe government bonds so that they could make some money on these deposits. Now, banks do this because the assumption is that not every client is going to need their money at the same time, and that's where shit hit the fan for SVB. You see, in 2023, interest rates started climbing and startups had a harder time raising cash, so many of them needed to access their savings in order to keep operations running. So in order to meet these withdrawal requests, which seemingly were coming in at the same time, SVB had to sell its bond investments at a major loss. But even with doing this, they still weren't able to keep up with withdrawal requests. So then, on Wednesday night last week, SVB tried to raise an additional $2 billion to stay alive, but when this news came out, all hell broke loose. With the world in a panic, several VC firms and dozens of startups started pulling their money from Silicon Valley Bank at an unsustainable rate. And by the next day, on Thursday, SVB's stock price was down 60%. And by Friday, US banking regulators took control of the bank. And that, ladies and gentlemen, is how you get the second largest banking failure in history. Financial knowledge is power. Please like and follow for more.